One tech stock to look at now as banks recover. Remember a week ago when we all thought the Consumer Price Index, CPI, report was going to be the catalyst for a market move? The CPI report may have assisted in the market rebound. Prices rose month over month and year over year, but at a slower pace than the last report and within the range that continues to decline with each report. This shows that inflation is slowly being handled, but again, there's still potentially a long road ahead as these numbers are nowhere close to where they were prior to the pandemic. Oh, and the second banking crisis to happen in the last 15 years. Okay, maybe crisis is turning out to be a strong word for this situation. As long as more regional banks don't come out of the woodwork and stop operations, this may just be a fleeting blip on the economic radar. On the 30-minute chart, the Dow Jones Industrial Average, ETF, DIA, is currently holding on to a support line of around 319. And the Nasdaq 100, ETF, QQQ, is looking at everyone else asking, what's the problem? The idea is that the banking mess will cause the Fed to reevaluate its schedule for rate hikes, and that will ultimately help the tech-heavy index. Fed fund futures suggest a slightly higher chance of no hike than any hike during the next Fed meeting. For more on this story, visit tradersreserve.com.